Welcome back. Let's get you some interesting exclusive stories now. The long-delayed resolution of debt-laden real estate financier Altico Capital seems to be progressing forward quite rapidly. In fact, it could be concluded fairly soon. That is what sources are telling our colleague Ritu Singh. So let's bring Ritu in. Ritu, I guess this is going to be important because this would be the first major stressed asset resolution outside of the IBC framework. So do give us the details.
Yes, we understand that Altico Capital and its lenders are finally signing a settlement agreement today, which will bring to an end the resolution process of the company, which has now spanned for more than 1.5 years. Now, as part of the settlement plan, we're given to understand lenders will receive a sum total of 2,759 crores against their dues, which total 4,121 crores. The shareholders and the board of Altico Capital have already approved the settlement plan. So this is the very last step which still remains. We're given to understand that the money will flow into accounts of these banks as early as next week itself. So therefore, it can be shown as a recovery for the current March quarter itself. Remember, Hong Kong-based Eris SSG Capital was declared the preferred bidder by the lenders of Altico Capital in March last year. And as part of the resolution plan, it will take over all of the loan assets of Altico Capital into itself. And thereafter, Altico Capital is expected to surrender its NBFC license to the Reserve Bank of India. The key lenders that stand to benefit from this deal include State Bank of India, Bank of Baroda, Yes Bank, Aditya Birla Finance and others.
Okay, all right, Ritu, thanks for getting us all of those details. Let's move on to another interesting story. Now, Karsan Bhai Patel of washing powder Nirma fame is all set to make a return to the bourses. Yes, and this is a story that Nisha Podar is getting us. She understands that with the IPO market being super red hot, Nirma Cement could look at a listing shortly. Nisha, do give us more details.
That's right. In fact, this is going to be a large IPO in the IPO market because Karsan Bhai Patel of washing powder Nirma fame, who earlier also made an attempt at the cement business IPO, is now making yet another attempt. In fact, sources with direct knowledge have shared with CNBC-TV18 that they are looking at raising about 5,000 odd crore rupees through the IPO of a cement business that is, remember, built over time in the last few years by a string of big, heavy, high-voltage acquisitions of Lafarge's assets in India and also Imami's assets. So in total, the overall portfolio could be the size of over 20 million tons of capacity, at least coming in the top 6 cement companies in India, especially in the listed space, and eyeing a valuation of about 35 to 40,000 odd crore rupees. But of course, the valuations depend on the kind of investor response they get, especially in their roadshow process. As far as the timeline is concerned, we gather from sources with direct knowledge that about 2 months is what they are going to take in really filing the DRHP with the SEBI, and their aim is to list the company by the end of this particular calendar year. So a large IPO really making its way in the IPO market, and especially with the valuations being quite lucrative, and also looking at the appetite of the investors in India, Karsan Bhai Patel is trying to return back after a decade to the IPO market.
Okay, all right. So another interesting issue perhaps set to hit the street. Thanks, Nisha, for the details over there. Now, we all remember that crunching trading halt at the National Stock Exchange last week. Well, SEBI has held a meeting with the stock exchange and the clearing corporations. Yash has been tracking these developments and he has more details. So, Yash, any fresh developments on the matter?
Well, Surbhi, I'm sure everybody remembers the trading halt which happened in NSE last week. And of course, it's been a sticking point for various market participants, be it brokers, traders. The regulator also, what we're given to understand, has taken its first move when it comes to finding a resolution to the issue so that it does not repeat itself. What we're given to understand is that market regulator SEBI yesterday undertook a meeting with all exchanges, that is NSE, BSE, MSE, also with clearing corporations to discuss the matter, and the point of discussion was on interoperability between clearing corporations and how that can really come to the rescue in such situations. Do remember, interoperability is a mechanism which connects the clearing corporations of exchanges so that if there is any halt, any glitch on one exchange, the trades can be settled through the clearing corporation of another exchange because of the connectivity. But in the situation of NSE that happened last week, clearing corporation was the spot where the problem really began from, NSE's clearing corporation, and hence the point of discussion for SEBI was to how to tackle the issue when there's a problem at the clearing corporation. What we're given to understand is that SEBI has made a committee to look into the matter, which is expected to submit its report by April. That's when we can expect some further moves from SEBI on this particular matter.
Okay, all right, Yash, thanks a lot for those details over there. We'll watch out for fresh developments in this issue. Let's move on now to some interesting employment data that has been put out by CMIE, the Center for Monitoring Indian Economy. Now, here are the numbers. They'll be up for you on the screen. The unemployment rate in the country has dropped to 6.5% in January from 9.1% in December 2020. So that sounds like good news. Now, the employment rate has risen to 37.9% from 36.9% in the same period. The data also shows that unemployment rate has recovered to pre-lockdown levels, but the labor force participation rate and the employment rate is still lower than the pre-lockdown era. Now, the report has highlighted that India's employment has been falling steadily and that the unemployment rate has not recovered as much as the recovery in the GDP. We caught up with Mahesh Vyas, MD and CEO of CMI, to understand what the sort of signals are, considering that some of these data points seem to be sort of giving mixed views out there. Here's what Mr. Vyas told us.
There is more hiring in the formal sector, which is a good thing, but there is a larger fall in the informal sector. That's not a very good thing. So that's what we see. There's a K-shaped recovery. Organized sector is recovering quite well, and the unorganized sector and informal jobs are not doing very well. I don't think it's appropriate to expect private companies to invest aggressively at this point in time, because they have excess capacities, because demand is not picking up, because excepting for a few industries where there is some demand, for example, in automobiles, in most industries, the capacities are far in excess of the demand. So it will take a little time. And I think we should give them a year more before CapEx picks up.
Okay, well, on that note, we do have to take a break, and all the commodity market action is coming up with Manisha in just a minute. But as we take the break, do hear out some opinion that we got from Rob Subramaniam of Nomura. Now, Rob said that we need to see how central banks are going to respond to rising inflation and whether the current bout of this inflation increase will indeed be sticky. If it's sticky, then it could be a problem for the equity markets. Take a look. We'll take that break and come back with commodities.
The general consensus is that inflation is going to start shooting up more sharply in the coming month. And then, the Fed's view, and I think a lot of central banks, is it's going to be temporary. But what if it's not? And what if this is the start of more entrenched inflation? That's when I think you could see bond yields ratcheting up further, markets worrying about central banks being behind the curve, and that would not be a very good environment for asset markets. The jury is still very much out on that. We're very bullish on India. Nomura, we're forecasting this calendar year 12.8% growth. So a very strong recovery. India has, got control by and large of the virus, and the economy on our metrics is almost fully opened up again. And so, that's the most important thing for growth. And you've got the fiscal stimulus as well, plus, of course, global growth starting to improve, which is good for Indian exports. So they're the factors that lead us to believe that it's going to be a very positive year for India. For India, and I think for EM generally, that risk I talked about US rates going further up and credit stress, I think that's a pretty bad scenario for EMs. And I do think central banks in emerging markets, it's a good precautionary measure right now when inflows are strong to continue building up FX reserves.